Hi everyone, and welcome to today's morning report analysis videos on Thursday the 13th of December with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively risk positive outlook across markets today. You're sort of seeing mild yen correction. Commodity currencies are all doing okay. And the euro is slightly higher. Sterling is also slightly higher. What we've seen in the last 24 hours is the Brexit issue in the UK continues to rumble on and create volatility through sterling. That was seen yesterday with the vote of confidence by Theresa May's own MPs. That she subsequently won, but seemingly not in the way that potentially could have strengthened her. It was a fairly sort of lukewarm victory there from Theresa May. And subsequently, it doesn't really change anything, really, in the arithmetic of the Parliament itself to get her deal through. So subsequently, she's going to go back to the EU summit in the next couple of days and try and get anything that she can out of the EU to improve the deal. Now, that really does revolve around the withdrawal agreement and the backstop. But essentially, it's going to be really difficult for her. And to be honest, nothing's really changed from this vote of confidence in her yesterday. Sterling was a bit volatile, but has remained around that breakdown level, 26.60. That is the key level of resistance area there. And it'll be interesting to see if that, again, is another opportunity for that to sell. Now, in terms of the dollar, we've seen the dollar, again, just fluctuating in recent days and weeks, really, as markets have sort of gone to and forth in terms of how they're viewing the Chinese trade dispute, and also how the significant fall in treasury yields has been sort of affected through the forex markets as well. So you've not really seen a great deal of direction coming out of that. In terms of risk appetite, still volatility on options on the S&P 500 are elevated above 20, so that sort of suggests that there is a degree of fear still. And to be honest, the rally that has threatened in the last couple of days has not really taken off at all yet on the S&P 500, again reflective of the sort of volatility that we're seeing. So we are still looking at the potential for these rallies to be sold into on equities, and ultimately looking through the DAX, for example. The analysis is on the website at the moment for today's move. Is this a failure of the rally? So that is an interesting concept there. So in terms of what we're looking for today, we've got the ECB monetary policy actually today, and that is one of the reasons why I think the euro is relatively stable in front of that decision, because the ECB is expected to end its asset purchase program of quantitative easing, bring that down to zero. But then what's the next step after that? So Draghi is going to be faced with questions presumably on forward guidance, when the next move is going to come from the ECB into next year, how the ECB views growth and inflation, which seemingly has been affected negatively in recent weeks. Certainly the German IFO, for example, coming out today and suggesting that German growth is going to be lower in 2019 is not helping that, Germany being the big driving force behind Eurozone growth generally. So that is a problem there for the ECB to try and cope with, and it's likely to be a fairly sort of muted and maybe even dovish move from the ECB in sort of ending asset purchases today. So also, we've got jobless claims at 130 as well, 225 is the expectation there, down from 231. So that takes me to my chart of the day, which is Aussie Kiwi. Now, this is an interesting chart because I've seen the Kiwi has been a significant outperformer, I think, across the majors in recent months, actually. Very strong performer. You can see on Aussie Kiwi where we're in this downtrend channel, and all these sort of breakdown points become new resistance. So starting with that breakdown from the top pattern back from the summer, breakdown in October, subsequently became a basis of resistance, and then all the subsequent breakdowns have also become a basis of resistance as well. Initial support 107.40 became resistance, and then you're looking at 107 big figure support becoming resistance, and then you're looking at 105.80 support. Is that support now going to become resistance? Because you've got the downtrend channel, Not only that, that's flanked by this 21-day moving average, which has capped all the upside moves since October, interestingly. Since the market started to trend, that trend line has been, the moving average has been the basis of the resistance, and that comes in at 105.95. Again, that will be around about where that resistance is, 105.85. Old support becoming new resistance. We've had the rally, but is that rally going to last? Well, it seems to be, on the momentum indicators, just another chance to sell. So you'd be looking out for the rally starting to find a little bit of resistance, 105.55, seemingly yesterday's high coming in as resistance. And is this again another chance to sell? As the momentum indicators start to roll over on the hourly chart, you'd be looking out for that support at 105.15, yesterday's or the overnight reaction low. If that starts to break down, and then sort of moving towards the next support of the breakout, the near-term breakout above 104.95. Again, a level of support. If that breaks, then you're going to start to build the momentum again to the downside. And I think the Kiwi is still likely to outperform on the Aussie in this environment. 104.30 was the support the other day. That's likely to be retested in due course. So this little rally on Aussie Kiwi is going to be seen as a chance to sell. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.